What up? Hope you guys are doing awesome. I was talking with my mastermind group, Legacy Family, on Friday. We hit on a couple of things, several topics that we hit on, and one of them I think is very, very relevant to right now, which is what actions are you taking, like specific actionable steps are you taking before the end of the year to reduce your tax liability for the end of the year. And we had a really good discussion on it, and I thought, what the heck, why not share it with you guys? I'm gonna go through a couple of things that we've made a big impact on, that have made a big impact for our financials over the course of the past couple of months. So over the past couple of months, we have reduced our tax liability substantially, and we've also I've raised over $7 million in the past 30 days for some deals, year-end deals, and I'll tell you exactly how I did that momentarily here. So, all right, three main things, and there's a couple steps to the last one, but three main things that I did in order to substantially reduce my tax liability for the year of 2024 and set myself up for better things in 2025 and raise a boatload of money before the year end. So number one was I purchased any items, any supplies, any materials that you might need. Maybe you have an Airbnb business, for instance. Any furnishings that you need for that. Buy it now before the end of the year, knowing that you're gonna need all those things in 2025. So it's a great way to take things that you're gonna spend money on next year anyways and just buy it now, so that way you get the deduction in 2024 for your 2025 expenses. So that's an easy one. So if you're looking to buy a truck next year, if you're looking to furnish an Airbnb, if you're looking to get all the supplies for your Airbnb or for the clubhouse of your apartment complex or anything like that, buy all those materials, buy all those supplies now before the end of the year, so that way you can write that off in 2024, right? So that's an easy one. Similarly, one of the things that I've been doing is looking at any sort of services that I have, and any services that I know I'm going to use in 2025, I'm prepaying for those services today. And maybe you can negotiate a discount. Maybe like there's a few things. Q Muldrick, right? She owns Legacy Digital. We have her doing reputation management for each one of our apartment complexes, and it's a couple $100 a month, and I'm able to then prepay for those and get that deducted in 2024 as opposed to in 2025, right? Mastermind memberships or any other sort of like consultings. If you have any sort of I don't know, fractional CFO, CMO, anything like that, any sort of services like along those lines that you can prepay for in 2024 before the end of the year, maybe even negotiate a discount, that is a great way to offset a big chunk of your gains in 2024. The other one, which has multiple parts to it, it's one of the ways that I've been able to raise over $7 million in the past 30 days, is cost segregation. We just did cost segs. We did the cost segs, and in 2023 it had a lot of rollover depreciation. And I did this last year, and I realized how well it worked. So last year I did a cost seg on a big apartment complex, and we needed to raise a bunch of money on there, and so we cost segregated it and created a new class of investor with very heavy depreciation. And with the cost seg, you'll learn that there's a little bit of a step down from the Trump tax credits over the past few years. So long story short, a cost segregation study allows you to take your property, right? Let's say you take your property and you depreciate a house over 27 and a half years, or a commercial property over 39 years. Now, not everything lasts for that long, right? Your HVAC unit over here might only last for 10 years or 15 years, right? The furniture doesn't last for a full 40 years. It might only last for 5 years. And so the IRS breaks it down into different classes of property. And when you break it down into different classes of property, you realize that not everything lasts for 40 years or 30 years. And you can segregate out those costs and depreciate those things earlier on and kind of front end load the depreciation. By doing that, you get more depreciation in the earlier years that you own the property as opposed to the later years that you own the property. With Trump's tax cuts, what he implemented when he was in office was you can accelerate depreciation and front-end load, take the first 5 years of property depreciation, put it all in the first year. And that has kind of, it's being phased out right now. It was 100% in 2022. It was only 80% of that you could take in 2023, 60% in 2024. Next year is going to be 40% unless he brings it back. And then otherwise it would be phased out by 26, 27. Here's what you can do. You don't have to do the cost seg study before the end of the year. You just need to raise the money before the end of the year. So what we're able to then do is create two classes of investors. And the way that I've done it is I structure a class with maybe a little bit higher preferred return, but no depreciation. The other class has really high depreciation with a slightly lower return. So on the one that we just raised on, we got it fully filled up in the first week that we took it out to our investors. Was we have a 10% preferred return with no depreciation in 2024, and then same amount of equity in the deal as the other class. The other class has, again, equal equity, but they have $100,000 of depreciation for every $100,000 invested, and they're able to, they get a preferred return. It's just slightly less. So I think we were paying like a 6% preferred return instead of a 10% preferred return. But when you start balancing it all out and look at what the tax benefits are of coming in, getting that heavy one-to-one depreciation, it allows them to offset their active income pretty substantially in 2024 and take money that would have gone to taxes and instead put it into a deal where now they're making money on it. Now it gets kind of reclassified as long-term capital gains depending on how long we hold it, and they have equity in the deal, right? So, and they kick the can down the road of what the tax liability looks like. So that has made a big impact for us being able to raise a bunch of money by our investors. The other thing you could do is, like a few years ago, I had a 401k, like 150 grand in it or something. And that 401k is pre-tax money that gets, put into a retirement account. By putting that into the retirement account, and doing a cost segregation, I had a ton of depreciation a few years ago. And so I've been able to then, in a year that you have a bunch of depreciation, you can offset and take all that money out and roll it into a Roth conversion. And so I took pre-tax money, never paid taxes on it when I brought it out because my depreciation offset that gain that I would have had, that tax liability that I would have had that year. Then I rolled it into a Roth component. By rolling into a Roth component, it makes it tax-free money and it grows tax-free. So now I can take it in a self-directed retirement account and deploy it into deals. So then, now that you've done those two things, now you can take, now you can educate your investors on this, right? It's something that they can do. Or if they have money in a 401k, you can say, hey, I'll give you $100K of depreciation. You can pull that money out of your 401k and $100,000, right? And you're able to offset their gain on that $100,000 by rolling it forward and giving them the depreciation class. And now you're raising money into some of your deals. The other thing is, some people who already have their money in a 401k or a retirement account that's self-directed, they're not able to get depreciation anyways, unless they're taking that money out, like what I just gave you an example on. So they don't need the depreciation. So it's a really cool way of saying, hey, if you have a retirement account, investing this class over here that has a higher preferred return, because you don't need depreciation anyways. And if you are not investing through your retirement account and you want depreciation, this could be a great way to do it over here, right? With extra depreciation, a little bit lower preferred return, but you're using tax-free or, a lower tax bracket of dollars to be able to do that with. Those are a couple things. So to recap, 3 things that I would absolutely do before the end of the year, you got 2 weeks to do this, is number 1, pre-buy any sort of material, supplies, equipment that you might need for your properties, for your business right now before the end of the year, so you can deduct it in your 2024 business returns, right? Second thing that I would do is look at all the different consulting services or mastermind groups or things like that you can maybe prepay in 2024 for 2025, get the deduction in 2024. So that way you're able to benefit from that right now. And then the third thing that I would do is look at doing a cost seg. And by being able to go out and do a cost segregation study, you're gonna be able to raise a bunch more money for your deals before the end of the year. The cost seg does not have to be done before the end of the year, but your investors do need to be in the deal
before the end of the year, unless they're already a partner and they're already involved and you want to create a new class. You can bring in more money and all that stuff. I think talk to your CPA potentially afterwards, but they already have to be in the deal in 2024 in order to get 2024 tax benefits of that. And you're able to do this because in an LLC, you can disproportionately allocate equity, profits, cash flows, and depreciation. So you can structure it, just get with your attorney, get with your CPA, and structure it in your operating agreement, and you can give additional depreciation to your investors. So, oh, there's Joe. Joe says, hey, having some tech issues. Thanks so much for sharing about cost seg. There you go. Joe's offering prepaid cost seg. So he's actually combining two of those things right now. So hit him up, right? He's a part of my mastermind group. We were talking the other day, and I was like, more people need to know that this exists, right? And so if you do want to take a look at cost seg, it doesn't cost anything to hit up Joe, shoot him a message. I don't get anything for this, by the way. He's just a great dude and a great member of our mastermind. And so I'm a big proponent of supporting awesome people with awesome business value that they can bring into your business. And so hit up Joe, do get a quote, right, on a cost seg. And so email him. You can shoot him a message, have him just look at, and you know, sometimes it makes sense to do a cost seg, sometimes it doesn't make sense, right? I usually do it for properties I'm holding on to for at least like maybe a few years, maybe 3 to 5 years or longer. I would absolutely do a cost seg on. Things that are less than that might not make sense, but take a look at your tax situation. It might. The other thing is I definitely do it on all my bigger properties because that's easy to do. But I think Joe has like an offering for single family that's like pretty easy and pretty cut and dry. You just kind of plug in some information, and it's lower cost than what a full cost seg study would be for a commercial property. But dive into it. It's really, really, really good stuff. There's a lot of different ways that you can defer taxes or offset your earned income in 2024 still, if you need to do that. So, and even if you don't need to do that, right? I don't need to do that. I have a ton of depreciation. I have a ton of write-offs. I have a ton of deductions, but I'm able to educate my investors on it. And I was able to raise $7 million in the past 30 days, all because I was talking about these things with my investors. So go put it to work. Let me know how it goes. Put it in like the comments of how much money you raised, what you were able to offset, all that kind of stuff. Love to hear all about it. And if I can ever be a resource for you guys, don't hesitate to reach out. So appreciate y'all. Have an amazing Christmas. Have an amazing Hanukkah. Have an amazing Kwanzaa. Have an amazing whatever other holidays you might celebrate. And a happy New Year. 2025 is going to be an awesome year. I know a lot of people have, especially in commercial real estate, got their butt kicked over the past couple of years with interest rates and insurance costs and all this other stuff. You know, I've heard buddies say, "Hey, survive till 25," and these big institutional investors and all this kind of stuff. Survive till 25. And I can tell you firsthand, I have seen a huge pump into the economy, into the confidence of people, and going into the new year. Might be new administration, might be just new year, might be just people are getting off the sidelines and want to make some bigger investments into making things happen in 2025. But I can tell, like, firsthand, there's a lot of really good stuff happening right now in the market, and a lot of excitement. So a lot of confidence in going into 2025. So survive till 25, thrive in 25. All right, y'all. Have a great holiday.